Welcome to the Finding Financial Freedom podcast with the Frugal Physician, where Dr. Disha Spath will be your companion on this exciting financial adventure. Get ready to conquer debt, build wealth, and embrace a mindful spending lifestyle that will empower you to live life on your own terms.
Welcome back to the Finding Financial Freedom podcast. I'm your host, Dr. Disha Spath, and today we have a very special guest, Dr. Stephanie Pearson. This episode is all about disability insurance, what's changing, what physicians need to know, and how to navigate the common roadblocks that can stand between you and the coverage you need. Now, for many of us, disability insurance is something we know we should have, but we may not fully understand the nuances of different policies, how they vary across states, or how recent industry changes could impact our coverage. That's where Dr. Stephanie Pearson comes in. Before beginning her career in insurance, Stephanie was in the prime of her career as an OB/GYN when she suffered a shoulder injury at work, one that eventually ended her ability to practice medicine. Her experience navigating the disability claims process, along with the emotional and financial challenges of losing her identity as a physician, drove her to become a passionate advocate for other physicians to secure the right disability coverage. Stephanie realized firsthand the gaps in her own policy and has since dedicated her career to educating physicians on the importance of having the right coverage. She became an insurance broker, one of the rare few who follow their clients throughout their careers, ensuring they are protected as their life circumstances evolve. In today's episode, we'll dive into the current state of disability insurance, discuss changes to several major carriers, explore how state-specific policies, especially in places like New York, impact coverage, and break down occupational class changes that could affect certain specialties. Dr. Pearson, thank you so much for joining us today. Let's start with your story. What was it like transitioning from clinical medicine to becoming an advocate for physician disability insurance?
Good morning, Dr. Spath. Thank you for having me. I love coming back. That is quite the question. It took some time. As you mentioned, I suffered a career-ending injury during a difficult patient delivery and learned a lot the hard way. It was certainly not a straight line from losing my practice to becoming an insurance broker. However, when I realized as I was trying to educate just my friends that there seemed to be a really big hole that seemed reasonable for me to fill. And so it eventually kind of fell in my lap, but 3 years later.
Okay. Yeah. And that's life, right? You have to sort of feel out the different pathways and see what works. And you've done quite a lot of great work here at Pearson Ravitz. Yeah. You've affected many different lives in a very positive way. And, and you've been on this podcast teaching us about disability insurance a couple of times. I wanted to bring you back on to talk about how the landscape's changing, because a lot seems to be changing around here. So I want to make sure we cover and provide that information to our listeners. So from your perspective, what's changing in the disability insurance landscape recently?
So in May of 2023, both Emeritus and Principal, who are two of the big, what we call traditional houses that cater to physicians specifically and allow us to have the language that we need, they totally changed their products. And why that becomes an issue is we all know that people talk. And I would have to constantly remind people, look, if you have a friend or a colleague who bought this policy prior to May of 23, you're not necessarily comparing apples to apples. And as recently as the summer of 24, some of those products are still changing by state. So initially, when they changed their products, there were about 8 states that had the previous product. Last I checked, which was not too long ago, right now, both of them are still not available in California. Emeritus is not available in Montana, and the new Principal is not available in New York. And so it really is an ever-changing landscape. And it's more about making sure, again, that people understand what lives in their product and not necessarily what their buddy has. And
Yeah.
so it's not uncommon that I'll get an email that says, hey, I was talking to my friend. Why are these different? And a lot of that comes back to education, which is the whole reason that we started the company.
Yeah. So are these changes that happen to these policies positive or negative for physicians, you think?
I'll go with both. They both made considerable changes. Admittedly, most of the changes for Emeritus, I think, were positive. They became more competitive with their cost of living adjustment, more in line with the rest of the field. Their residual language was improved upon. Their limit was elevated. They got rid of one rider that was called the non-disabling injury benefit, which admittedly we only have an N of 2. So it's not like it's a rider that is extensively used, but it said that if you incurred an injury or illness that required medical attention that your health insurance didn't cover, they would pay up to $3,000 per episode. Now they've replaced it with something called an advanced benefit. And so, in the event that you have an injury or illness that requires medical attention that your health insurance doesn't cover, they're only going to give you $500.
Hmm.
And then, if that problem becomes a long term disability, they're going to subtract $500 from your first month's payment. I have to be honest, our time is worth more than that. The amount of time that it would take to file a claim to get $500, in my opinion, isn't really worth the time. So I don't love that new switch. Principal, and they're a wonderful company. The new product, however, really seems niched in that they've changed the way that you can increase your coverage. So historically, with Principal, we had to ask every 3 years. They would demand that you take at least half of what's being offered. If not, they removed the ability to get more later. With their new product, it's kind of interesting. I honestly can't get very straight answers, but they've tied the increase to major life events, which people don't equate with disability insurance because our incomes usually don't change. So, in the first 3 years, you can increase it as many times as you want. So, sometimes if I'm speaking to somebody who's just graduating and really thinks that most of their bumps are going to happen early, that may make sense. But outside of that 3 year window, it's marriage, birth or death of a child, having a increase of income of either 20% or 50%, depending on the state. And so once you become an attending, I don't know very many people that have that big of an increase year over year. And it's not until year 10 that you get, quote, a true buy-up, which to me, I'm very nervous that we're not going to be able to keep pace with people's incomes. And not only that, but there is what I refer to as a gift in quotes rider in every carrier where they'll increase your benefit a small percentage for a certain number of years just because you have their product. For most of the companies, you can decline it and it doesn't affect the full future pool. They're completely separate. Principal has now married them. And so if you decline their yearly increase 2 times in a row, they take the entire pool away. And while we have an entire department that is the whole reason they exist is so that riders don't fall off so that riders don't fall off products. I'm nervous that just because of human error, that puts a lot of responsibility on both parties to make sure that that doesn't happen. I just think it leaves a lot of room, one, for people losing what I consider to be the second most important piece of their policy, and that we're not going to be able to keep pace with people's incomes. And because the product is so new, we just don't know.
What do you mean by the pool?
So every carrier, when you get your policy, you have your monthly benefit, and then you have the ability to increase coverage without giving medical information. So the fancy term is their participation limits. I refer to it as the pool because everyone has one. They just all call it something different. So imagine the plastic kiddie pools that you put in your yard for your toddlers. Imagine that full of money. Every carrier has it. They have slightly different rules and triggers as to how you can access that money, but it's ultimately how we can keep pace as people's incomes ascend.
Got it. Okay. So it sounds like, well, first of all, going back to what you mentioned about the benefit for health insurance, they would pay, disability insurance would pay a certain amount if your health insurance didn't cover an acute illness. I didn't even know that existed. So thank you for bringing that to my attention.
Only in emeritus. They're the
only at
company
emeritus.
that doesn't.
Okay.
Yes.
Got it. Okay. All right. Also good to know. And yeah, I agree. 500 would not be worth covering or going through the paperwork to even try to get. Maybe 3,000 would. I don't know. But in any case, yeah. At least for me, it would be. But that's good to know that there are policies out there like that. Are you seeing that because you said they were increasing the benefits base most overall? Are they also increasing the prices on these products?
So the interesting thing is it depends. We've also seen some occupational class changes. So I'll take a step back. When you apply for a policy, all physicians get pigeoned into what's called occupational classes. That's the company's internal dialogue of what your risk is going out on claim. So it shouldn't be a surprise that, say, emergency medicine physicians have a lower occupational class, which equates to a higher cost than, say, a family medicine physician, right? Their risk just across the board is a little bit higher. What happens is every couple of years, different carriers will change occupational classes up or down based on their claims data. And I did that in quotes because it's proprietary. We can't get our hands on it. Sometimes I can get bits and pieces of who's gone out on claim. And I've always kind of made this broad assumption that if all of a sudden a certain group of physicians is more expensive this year than they were last year, then I have to assume that more of that type of physician went out on claim last year. And so there's not really a rhyme or reason. Different carriers do it at different times. Again, emeritus is kind of at the top because they're doing a lot of changes. They have downclassed a host of physicians, making it more expensive. And so ultimately, you want to make sure that when you're being educated about the products, that you're being given more than one option. I'm always a little bit leery when you're talking to someone and they just say, this is it. There are currently 5 companies that cater to the physician marketplace, and it truly depends on the type of doctor and the state to figure out who's going to price well for any individual person. It is not a one size fits all.
That's good to know. Has inflation and the economic environment impacted disability insurance at all?
Hasn't necessarily affected the product. I think across the board, and I talk to a lot of other agents and brokers, the playground's not really that big. We're all seeing a little bit lower sales. I think that with increased inflation, especially residents have less expendable money to spend. And even though I believe that this is a necessity, insurance is still viewed by the general public as additive, right? And so I certainly don't want people eating cat food to have insurance, but we have seen people maybe hold off a little bit longer than they would have, maybe not purchase as much as they can, which I mean, I always tell people just because you qualify for a certain amount doesn't mean that you need to purchase it all up front. But I urge people to get it as young as they can, as healthy as they can in training, because there are way more discounts. But we've definitely seen a little slowdown there.
Okay. Are any carriers becoming more physician friendly?
Again, it kind of depends. I hate saying it depends all the time, but there have been a couple of occupational classes that have been made better.
Like?
Principal's new product is often, we'll find that it prices well for men more so than women in certain occupations. And of course, right now I'm having a complete mind blank, but each of the carriers has their niches where they just do better for certain occupational classes. And I'm convinced it's for them to even out their books.
Pearson Ravitz' story begins with Dr. Stephanie Pearson, a passionate OB-GYN at the height of her career. But then, a shoulder injury struck during a precipitous delivery. Her dreams were shattered, leaving her unable to practice medicine. Determined to make a difference, Stephanie became an advocate for her peers, guiding them through the complex disability process. Alongside insurance expert Scott Ravitz, Stephanie founded Pearson Ravitz, a company determined to approach insurance differently. Together, they set their mission to educate and empower physicians to protect their most valuable asset, their income, and the most important people in their life, their family. Today, Pearson Ravitz serves the medical community in all 50 states. At Pearson Ravitz, they understand the unique concerns of physicians. Physician-founded and physician-focused, Pearson Ravitz builds human connections before they create quotes. Life can change in an instant. It's hard to imagine that a sudden illness or injury could leave you and your family in a devastating financial situation. But with a little planning and guidance, you can prepare for every possibility. Visit PearsonRavitz.com to schedule your consultation with a Pearson Ravitz advisor. Interesting. Yeah, I mean, I guess that would make sense. Insurance companies are in the business of mitigating risk, and I'm sure they're, very focused on the numbers. So, makes sense. You mentioned how there were state-by-state differences in emeritus and principal. Can you explain how disability insurance policies differ from state to state in general and why state matters?
So the biggest is cost. There are certain states that have a history of increased claims, and the way that the carriers deal with that, right, is that you pass it along to your purchasers. So California, New York, Texas, Florida, New Jersey, and oddly Vermont tend to be more expensive than other carriers. In Vermont and Texas, you can't limit mental health coverage in a certain way. Most of the carriers in most of the states, we have an option. You can ask for full coverage for the life of the policy, and I'm just talking about mental health and substance abuse. Or you can accept a shorter benefit period, 2 years, and most of the carriers will give you a 10% discount for the life of the policy. In Vermont and Texas, it has to be 2 years per episode instead of a 2-year aggregate, which may not seem like a big deal, But you change one little word and it completely changes what the policy looks like. Because Texas is 2 years per episode, their discount's only 5% instead of 10% if you opt for that change in your policy. New York, interesting, some of the riders are not available. So Emeritus has a COBRA benefit. They're the only company that acknowledges that if we can't do our job and we're employed physicians, we're going to lose our job. If we lose our job, we're going to lose our health insurance. Emeritus has a COBRA benefit, and it will pay up to $1,000 a month for up to a year and a half to put towards COBRA. For many of us, that's incredibly sexy. For some of us, maybe not, right? I jumped right on my husband's. It would not have been a benefit that I would need, but they don't have it on the New York policy. Standard has a family care benefit. They're the only company that acknowledges that sometimes we have to take time away from work to care for seriously ill loved ones. They don't have that rider in all 50 states. New York is one of them. Right off the top of my head right now, I can't think. But there are a couple states where they don't have that. Also, now I'm really going to nerd out. In 2016, Standard changed their language for travel abroad exclusions. So taking a quick step back, most of the carriers, if you become disabled, so you're sick or injured, they're paying you. If you leave the United States for an extended period of time, and they have different definitions, principal, you have to be in the US or Canada for 6 consecutive months a year, or they can limit your payout to 12 months. Emeritus, once you're outside of the United States, they can limit for 12 months. Standard for certain states got rid of that language, and they will actually pay you anywhere in the world as long as you play by their rules. And so that is also really sexy for a lot of our clients who may be first generation Americans or second or third, but have family somewhere else, or always thought to themselves, hey, you know what, if something ever happens to me, I'm moving to Belize and living on the beach, right? And so not every carrier allows you to do that. And so it's another one of those weird little nuances and things that I don't think people generally think about, that if I'm going over a policy with somebody, I might say to them, hey, this is something that's unique to them. And if it's really important to you, it may be worth paying a little bit more for, right? And I think that one is really important to a lot of people.
All right. Well, we've covered some really interesting changes. Are there any other major changes that we should go over today, Stephanie?
I think those really are the big ones. I mean, I think that it's worth reminding that when you're in training, everybody qualifies for the same benefit. They don't look at your income or how much you get by your employer. There is something called starting practice limits, which I don't think are as widely known as, quote, the resident package. And I'm painting with a really wide brush. There are a couple nuances here, but for the most part, if you are within 6 months of graduating training or 6 months to 2 years into your first attending job, almost everybody can qualify for a $7,500 a month benefit without them looking at income or group benefits. And for a lot of our primary care folks, when you take into account employer benefits, they don't actually qualify for that much. And I'd rather see them capture that $7,500 in their private pool while they have the opportunity to capture that right then. So we always talk about when's the best time to buy a product. And obviously it's younger, healthier, all of that stuff. But if you get a policy when you're a resident, even if you don't get it exactly when you're, early in training and you're waiting until the end, there is a really valuable gray zone for that starting practice limits.
Okay, good to know. Well, Stephanie, we deep dived into a lot of minutia about insurance, and I understand, that you and I understand the importance of it. Let's put this into perspective for someone who has never heard about disability insurance and why it's important. Can you share a case where a physician's disability insurance made a significant difference in their financial life?
Oh, sure. I mean, we've had dozens and dozens of clients who have already had to go out on claim without, messing up with HIPAA. But we've had folks who literally, if they didn't have their policies, would have had to sell their houses. One of my partners had a tree during a snowstorm, had a branch fall on his head.
Oh my goodness.
He was crushed. He was is an EM physician, great at singular tasking, but not great anymore at multitasking, and has diplopia and some hearing issues. So again, disabled human, disabled EM doc, absolutely. And he was actually well covered. I mean, we used to joke that I was undercovered. He was at least fully covered. And completely gave him the space to figure out what he was going to do next. And he was with us for a little while. Now he's transitioned over to pharma because he really misses science. And so, that's one. I have a case where mom and son got into a little spat and he threw a geode and it just got her at the right spot on her temple. And traumatic brain injury in a field of medicine that is actually not procedural. She's a psychiatrist and her cognition's been affected and she has an 8-year-old son to take care of. And so being able to capitalize on the coverage that she had is changing her lifestyle. It's changing her life. I cannot express in enough words what having these policies in your back pocket does moving forward. I've said it for myself. If I didn't get, and I was underinsured, but we didn't have to sell our house. We didn't have to pull our kids out of private preschool, which I realize #first world problems, but these are the things that we want for our families. It's part of why we go into medicine. It's part of why we choose the fields that we choose, because we want to provide for our families. And being able to capitalize on private policies makes all the difference in the world.
Yeah, absolutely. I totally agree. I think this is one of those, pieces of the financial plan that is easy to look over or delay and just sort of procrastinate and not do. But it is so important because you never know when life happens. Life takes U-turns and 180-degree turns all the time, right? And we need to be prepared.
Cancer does not discriminate.
Right. Right.
Sorry.
Accidents don't discriminate.
Right. And we're seeing cancer younger and younger. It's not just in medicine that we're seeing it. On the disability side, we're seeing it. Last year was a terrible breast cancer year. Most of our women tried to go back part-time, which is why the residual or partial disability benefit is so important. We had a couple really young colon cancers, like 38, 40, 42. And Principal does have a rider that if what takes you out is related to certain cancers, there's an additional benefit. And we have seen that work for some of our cancer folks.
That's great. That's great. Well, Stephanie, I know you work at Pearson Ravitz. So can you tell us why Pearson Ravitz would be the right company to choose to shop these disability insurance policies?
So, of course, it's going to sound salesy, but this is it's a really interesting sales space in that we're not selling widgets, right? So I don't control the product, don't control the cost, I don't even control what I can get for people. It's based on internal algorithms, again, that look at how much money do you make, what benefits do you get through your employer. So it's not like you can say to me, hey, Steph, I want 20,000 a month. I'm willing to pay for it. If the math doesn't work, the math doesn't work. What we can control and why we started this company was because we can control education, advocacy, and service. And when I got hurt, the guy who sold me my policy was basically like, I got nothing for you. It's between you and the company. For us, if anybody has to go out on claim, regardless of who sold them their policy, I speak with them. They get my cell phone number. I help them go through what to expect. I help with the forms. I mean, I'm not like doing forms for people, but I'm helping them kind of, this is what they're expecting. You know, this is what you need to put down. I follow up with them every couple of weeks and kind of space out. We lead with education. It's not, here's what you need, buy it. It's, here's your options. Here's what's unique. Here's what's universal. And again, we have an entire machine built to keep up with people. We touch people at least twice a year. We're always available. And I honestly think that we give the best service around.
Well, I think when you're going through something that's scary, to have someone that you can, just sort of talk to and that knows about the process, I think that would be a valuable, very valuable thing. So thank you for sharing that. And thank you for doing what you're doing. We appreciate it. So Stephanie, before we wrap up, I'm going to do a quick rapid fire segment with you. We like to do this as super fun. Just give us your, the first thing that comes to your mind. No pressure. Are you ready?
Mm-hmm.
Okay, let's go.
Yes.
What's the biggest misconception about disability insurance?
That you don't need it.
Yeah, true. If a physician could only ask one question when purchasing a policy, what should it be?
What is the full definition of total disability?
So tell me why that's important real fast.
So a lot of, especially we see this in the group employer space, that they'll say that their own occupation, and they may actually be own occupation by the definition of own occupation, which is what you do day in and day out. Often they're not. Often it'll be what's called held to the national economy or the local labor market. It's not specific what one employer does for one employer, what one employee does for one employer site. However, a lot of their definitions of total disability will be, you're disabled if you can't do your job and you're not gainfully employed. With a proper private policy, and you may have to purchase the right language, it changes it to, you're considered totally disabled if you cannot do your job, regardless if you're gainfully employed in another occupation. So again, it changes one little phrase, but allows you the opportunity and the bandwidth to figure out what you want to do next without having to worry about losing any or all of your benefit.
Yeah. Okay, that's really important. Thanks for bringing that up. What's one red flag in a disability policy that physicians should watch out for?
Privately, it really depends on what's important to one person or another. Again, for the carriers where you have to purchase the right language, you want to make sure that you have that right language. Recently, I've seen a couple of policies where someone will say to me, oh, I was told it was own occupation. And I'm like, I don't see it. And a lot of it is because without the right language, that definition of total disability, even on the private side, is similar to the group side. And so you really want to make sure that you have the right pieces. On the group side, there are lots of red flags. Again, one, how do they define own occupation or specialty specific? How do they define total disability? What's the maximum benefit? Is it getting taxed or is it not getting taxed? So I think there's more in these group employer policies that I find are almost lies of omission because it's one line in our open enrollment packet and you check a box. They don't even have to give you the document. And when it's that hard to get your hands on something, there's usually a reason.
Let's wrap up with, since we are a financial podcast, what's one financial habit you think every physician should develop?
Oh, God. I mean, I guess it sounds trite that everyone should have a disability policy before they graduate training. I would also say for our women listeners, get your first life insurance policy before you try to make babies, because things like gestational diabetes and preeclampsia will as much as double to quadruple your cost of life insurance. And I'm not so sure that that information is wildly disseminated.
Yeah, absolutely. You know, women, we take the brunt of a lot of risk early on in our lives, and unfortunately have to pay for it.
Do.
Yeah. Well, Stephanie, thank you so much for coming on. It's been an incredibly insightful conversation. We've covered so much ground, from how the disability insurance landscape is shifting to the roadblocks and state-specific policies and occupational class changes that could impact our coverage. One of the biggest takeaways is that disability insurance isn't just another financial product. It's an essential safeguard for your career and financial well-being, your family's financial well-being. So thank you again.
Thank you for having me anytime.
Stephanie, where can our listeners find you if they want to learn more or reach out for guidance?
So Pearson Rabbits is the company, so pearsonrabbits.com. And I am on LinkedIn, Facebook, Instagram, and I am more accessible now, I think, than when I was a clinician.
Thank you again for joining us today. And to our listeners, if you found this episode helpful, be sure to subscribe, leave a review, and share it with a colleague who might benefit from this conversation. Stay tuned for more financial freedom insights, and we'll see you in the next episode. Stay frugal, y'all.
The content shared on this podcast should not be taken as individualized financial advice. We are here to share our knowledge and experiences, but it is crucial to consult with professionals such as accountants, financial advisors, or attorneys who can provide personalized guidance based on your specific needs.